Welcome, everyone, to the rise of private equity in sports. My name is Shawn Quill. I'm the National Sports Industry Leader for KPMG. We're really glad that you chose to join us today. To give you a little bit of background, the KPMG sports industry practice that I lead for the firm is also present in 18 other countries around the world. Here in the United States, we have more than 350 partners and professionals who serve professional sports organizations and collegiate sports. That includes most of the leagues like the NFL and the NBA, includes 50 plus sports teams, facilities on interesting things like fan experience design and technology enablement, and of course, advising our clients on sports deals, which is the topic that we're here to discuss today. To set the scene for our conversation, we're here today because the NFL made some big news in the sports industry earlier this month by announcing that they are changing their ownership rules and allowing institutional capital for the first time. The NFL was the last of the major sports leagues here in the US to evolve their rules to allow private equity. And so you might be asking, why now? Well, about a year ago, July of 2023, in fact, the Commanders sold to Josh Harris and his investor group. And that perhaps was a trigger for advancing this conversation. Given the $6 billion asking price, the constraints around ownership rules, the potential suitors were naturally limited for that process. As you may know, the principal NFL owner must own at least 30% of a team, and the ownership group can't surpass 25 people. And in particular with the NFL, but with all sports franchises, record team valuations we continue to see. And we believe this demonstrates the continued interest and belief in the value of a sports franchise as an investment, and moreover, the reliable value of the sports industry. And so with these new rule changes, we believe this will further open up investment within the sports industry for the deal market, and there will be new opportunities for many players. So to help examine this development, I'm pleased to have with me three of KPMG's foremost experts in this area. We have Paul Harris, our deal advisory leader for sports and media, Scott Purdy, our national media industry leader, and Glenn Mincey, our national private equity leader. During this time of our discussion, please feel free to post comments or questions throughout the LinkedIn Live. Our team will look out for them and will endeavor to try to answer your questions towards the end of the session and follow up if we can't get to everyone. So with that, let's get to our discussion. Glenn, I'm going to start with you. As we've talked about, the NFL's made this major news now in changing the rules, allowing minority investments from institutional capital. I'm sure it's been a hot topic of discussion in your circles. Why, in particular, are sports franchises such an attractive investment for private equity firms?
Thanks, Shawn. So first, let's talk about the obvious elephant in the room with regard to the NFL, at least. Who wouldn't want to be involved with an NFL franchise, right? The proportion of season ticket holders on this call has to be really high, upper 60s, I'd imagine, if not more, right? So the inherent concept itself, and this goes beyond the NFL, but to sports franchises in general, it's exciting. It generates enthusiasm, but it has to make sense in a business that prides itself on outsized returns. So there's no question that sports, as you mentioned, have become increasingly popular as an asset for PE firms over the past decade. And we're definitely going to continue to see more PE firms targeting sports assets and launching sports strategies, right? Because they're reliable assets no matter the economic climate. Let's look at the current state with regard to the NFL. If you look at the 7 PE firms that have been approved for an NFL investment, they own over probably 2,000 assets. Sports-related investments comprise in the low 40s, I'd say. So think about that. As a percentage, it's not even 1% of the group's total number of companies before you even start to talk about AUM. And those investments range from direct ownership in teams, whether it's the NBA, Major League Baseball, MLS, Premier League, women's sports, volleyball. You can't name them all. I'm sure Paul's going to tell me that I forgot cricket, which actually is a PE investment. But it ranges also to sports betting, sports media production, and on and on and on. And so that's current state. Looking to the future, even the current allocation of 10% ownership across all of the NFL franchises combined would amount to about 19 to 20 billion. And that's if you could purchase part of all of the teams. And I know Paul's going to talk later about the actual restrictions that would reduce that number. But So looking at that number, 19 to 20 billion, is a proportion of the total $2 trillion in AUM for those sponsors involved. It's still fairly small. But as you mentioned, Shawn, the asset class is very, very attractive. If you look over the past 20 years, the league's total value started as around 23 billion, and it's increased to over $200 billion, which is over an 800% gain. And so by comparison, that beats the S&P 500, certainly, which has risen over, call it 650 or 660% over the past 20 years. So these aren't only outsized returns, but they also tend to be less volatile than other investments. That desire for bread and circuses, it's been reinforced since the pandemic, and fan bases are truly loyal. My team hasn't had a winning season since 2017. And in true Stockholm syndrome, as a victim, I keep going back for more. But all right, if you look at the PE business model, it's this: find an asset, bring in world-class management talent, discover and correct inefficiencies, and then apply the benefits of scale. This industry is ripe for innovation, and PE is really, really good at exploring the things you didn't think of before and then executing on it. And always count on PE, looking at those adjacent opportunities, businesses that depend on and thrive upon the primary investment. And so whether that's media, broadcasting, media rights, streaming, whether it's apparel, sports experiences, and hospitality, just to name a few. So the opportunities for growth are tremendous. But getting back to my very first comment about excitement and enthusiasm, you can't underestimate the impact this is going to have on fundraising and on investors. For those folks who can't write a $5 billion check to own a franchise, the ability to own a sliver is incredibly attractive.
Awesome. Thanks, Glenn. That certainly helps to understand the asset mix and the trends, and in particular, the whole concept of innovation that you mentioned as regards to PE and sports teams. So let us turn the perspective. And Scott, I'm going to come to you and ask you, about the attractiveness to the sports teams, the franchise owners themselves, these principal owners who haven't had the influx of institutional capital for a long time. From a commercial, operational standpoint, perhaps, why is this attractive for the owners to consider?
Yeah, thanks, Shawn. And I think, Glenn set the stage well on the private equity side. If you take a kind of look on the other side of the table, like why sell, right? Would be a big question. But I think there's, three benefits that I'll just highlight. The first one is liquidity. So taking advantage of the premium valuations that they now have, owners can transact, the principal owners can transact more easily now, essentially cash out up to 10% with the private equity firms, especially without giving up control. Before you used to have to sell the whole thing in order to liquidate. Now you can sell a smaller piece. And family offices and ownership groups are relatively complex structures. And this provides the ability to cash out other stakeholders, other family members with a relatively straightforward solution, if you will. The second main benefit, and the one that I'm excited about, is investment capital. Right? And so this is going to be new money that's invested back into the team, into things like stadiums and venues, into fan experience, into the players, and hopefully into communities, right? And helping grow the game, helping grow the sport, helping grow the team. And I'm excited about this one also because of what Glenn said. I'm hoping we're going to see a lot more innovation come into the league. Teams are going to go strive for better performance from their players. They're going to go for increase and deeper fan engagement. And they're ultimately going to drive some of the commercial revenue streams with this influx of capital, and they're going to pull these levers. And these things are not inexpensive. A lot of these dollars used to come out of the owners' pockets. But now, if you take the NFL, for example, the approved firms have committed $12 billion in potential capital that's going to go in. So, that makes up a good percentage of that capital that can be spread across the entire NFL ecosystem. And it's not a small dollar amount that's coming in. And then the third benefit maybe is something that not everyone has thought about is, it's around valuation support. Like Glenn said, there's not a lot of people that can write multi-billion-dollar checks, right? And this opens up access to, let's say, a community of deep-pocketed investors, professional investors, who can now provide some financial backing for this. So, and in many ways, it helps because it brings more buyers to the table, and it can help support higher valuations, because otherwise you're a limited number of potential buyers for some of these assets as they reach into the billions and billions of dollars of value. And I'd say it almost creates a bit of an equity exchange around this market, because I do think that these different pieces of different NFL franchises will transact more frequently. And so I just close with the same belief that we're in the early stages of this. We think all these different trends will continue, but very exciting to kind of see this, large amount of potential capital be invested into the game.
Great. No, thanks for sharing that perspective, Scott. And that helps to understand. I was really intrigued by your comment actually about infrastructure and facilities, and the number of sports facilities we're seeing, the arenas, stadiums, practice facilities even, that seem to be a major emphasis right now by owners. And so you go about those processes and you see the price tag on those developments, and certainly that begs the question about where that capital is coming from. And as they compete for the best players, it certainly seems to be a priority. The best training facilities, the best stadium experience, the fan experience that you provide to your fan base. So, okay, so let's talk a little bit about the rules. I think we all touched upon it a little bit, but I think it would be helpful for everyone to have a clear picture of the differences in the rules. For this, Paul, we're going to turn to you. And the NFL will rather modestly, compared to the other professional sports leagues, change their rules, right? But can you perhaps outline the major differences between the NFL and the other 4 major sports leagues in the United States?
Yeah, thanks, Shawn. Appreciate it. Let's start with a quick baseline, maybe. The average NFL franchise is worth nearly $6 billion, according to Sportico. And I actually think that CNBC might have come out with a list last week that actually upped that average value to closer to $6.5 billion. So clearly these are significant assets and appreciating assets. The firms that have been permitted into the league, and maybe let's just take a look at what the NFL has actually agreed to. The firms that they've agreed to bring in are Arctos, Ares, and Sixth Street. There's 4 other firms that have agreed to act as a consortium and buy and sell together: Blackstone, Carlyle, CVC, Dynasty, and Ludus. As far as we can tell, the other major leagues don't have similar approved funds, remaining open in theory, at least to any private equity funds having the ability to invest in them. Across the 4 major US leagues, there's this is excluding the NFL, there's about 121 teams. More than half of those have some private equity involvement in the ownership already today. That does suggest that demand is high with private equities, and that over time we could see 15 to 20 NFL teams take on private equity investors into their cap table. So I think there's a good landscape there. Let's take a look at specifically what the NFL has agreed to and what the other major leagues allow. And if we can bring up the slide that we prepared. Thank you. So what are the rules? So first of all, firms that buy into a franchise must purchase at least 3% of a team's equity. They can't buy more than 10%. So the maximum that any team can sell to private equity is 10% of the equity. This means, in theory, you could have 3 private equity firms that could invest in a single franchise, although we expect on a practical level that in the short term, most transactions will be single fund or consortium purchases, at least in the short term. There is a mix of rules across leagues where the NHL and the MLS have a $20 million minimum. Interestingly, today, at today's valuations, that $20 million is about 1.5% for NHL, and it's about 3% for Major League Soccer. So not completely out of the range of the NFL's 3% minimum, although on today's valuations, that does represent sort of somewhere around $180 million of investment, minimum investment for an NFL franchise, and potentially up to 600 or 650 million, at 10% of the $6.5 billion we just mentioned. Any purchase by a private equity firm can't be sold for 6 years. So the NFL is asking for at least a 6-year lockup. Other major leagues don't appear to have a similar minimum threshold period. So that is something the NFL have introduced. The maximum team a single firm can have a stake in is 6. Again, other leagues have differing rules, from 4 in the MLS, 5 for the Hockey League, National Hockey League, and NBA, and an unlimited number of investments for Major League Baseball. That means that based on today's average value, average team value, a private equity could invest as much as 3.6 billion in the NFL, 6 teams at a 6 billion value at 10% in each. The league does have a few other rules. Specifically, it does require that an investment fund has at least $2 billion in capital. So it's essentially putting in a hedge against a fund being too small. And also that 20%, no more than 20% of the fund's assets could be invested in any one club. Again, a bit of a hedge against problems on the fund side of affecting a team. So essentially, if you think about those valuations, a fund would need to have at least $900 million to be able to invest in an NFL franchise. That's 900 million. 20% of that is 180, which is 3% of the average, valuation, if you're following the math. No one person can also account for 7.5% of the assets of any of the investing funds. Interestingly, NFL owners themselves can invest in the private equity funds that own equity in their teams too. The league has put limits on how much the owners can put into those funds. I think it's no more than 3%, could be from an owner or their immediate family. So in practice, this makes the NFL the last of the major US pro leagues to allow institutional investors. Overall, the rules that they've put in place are not that different to other major American leagues, albeit a little bit more conservative on balance. Anyway, we believe that the term sheets for at least a handful of deals that have already been prepped in anticipation of these rules. And as I previously mentioned, if you look at private equity investment across, some of the other big 4 leagues here in the US, there is already significant private equity investment in the teams in those leagues. So, Shawn, hopefully that gives you a sense as to the rules that the NFL has agreed to here.
Yeah, that's fantastic, Paul. Thanks for going through the details of that. And it is particularly interesting looking at what those percentages mean as it relates to the current franchise values, which, of course, we see ratcheting up deal after deal after deal. And so it is interesting, the perspective that they've taken, and we'll have to see how that evolves as well. Paul, just to say it, right, KPMG has been a leader in the sports M&A space for a number of years now, and we've worked on a number of large transactions. Can you just share a bit of that so people have the context of the experience behind your perspective?
Yeah, for sure. Thanks, Shawn. So yes, we've been a supporter of sports transactions for many years, both helping clients on the buy side of these deals as well as the sell side of transactions, helping those sales process, helping owners, sell stakes or sell the team in whole. We've advised both high net worth individuals and private equity funds alike in transactions. Some of the recent creds we have include several NFL investment deals, including the Washington Commanders sale. We've also supported, around the Chelsea Football Club transaction. We're involved in the Manchester United recent sale. We've also helped clients buy the Formula One team business, as well as the MotoGP business. We were involved in the PGA investment earlier this year, as well as the New York Mets transaction. So some significant franchise names, league names, and transactions there that form a staple of the advice and client base that we're supporting clients with.
Great. That helps to have that perspective. I want to again encourage people, if you have questions, we're now moving a little bit more to the Q&A time of this, outside of me hogging all the questions. So please let us know if there's something that you'd like to ask, and we can entertain that. As we await for that, let me go back to you, Glenn. It's certainly an exciting time for the private equity industry. We've seen some big trends even in the last few months, and this seems to be an exciting opportunity. Do you feel that that's the reaction that it's getting within the private equity community? What are you hearing? And also, do you have some thoughts for potential investors who might be looking to dive into sports as a new industry? What advice would you have to share?
So thanks, Shawn. And you're right. It's early days, right? And so those numbers that we talked about before are certainly going to creep up. I believe that the experience will be positive for both sides, right? Both current owners and actually all three sides, and the sponsors who are going to be investing, and then their constituent investors as well. I think it's very exciting. The benefit is going to be for everybody. Shawn, you mentioned before about focusing on the fan experience, the stadium experience, and PE. Through our work with them, I know very well that they're very active and focused on the overall customer experience, which that's going to benefit all of us as attendees. But also the team experience, I think that's certainly important as well. And shameless name dropping, Shawn, with our buddy Steph Curry, he did mention that the focus on the team, and he mentioned that the family that owns the Warriors, that they really focus on the team and making sure that the team is taken care of. And private equity is really, really good at keeping an eye on their key players, right? And key players in business, I mean. And that that translates here as well. And so it's not just monetary rewards, it's being part of the overall organization. I guess we can name names, in the consortium, right? In those 7 sponsors, I mentioned that they're about $2 trillion of a total AUM. Blackstone is fully 50% of that. Blackstone is over $1 trillion themselves. And one thing that Blackstone does is it makes sure that any investee, right, any company that they purchase believes that they're part of the Blackstone family. And so they remember I mentioned the benefits of scale. And so it's a push and pull. And all of the other firms do that as well, for sure. The last thing that I'd say is, Shawn, you mentioned stadium renovations. And there are quite a few on that list. It's the Bills, Titans, Browns, Bears, the Commanders. I mean, the list goes on and on. And one thing, Shawn, that I know that we do, through you, we focus on the, additional income opportunities for the stadium. Event-based venues, they make money when the event is on, right? But we've helped partner with certain venues to show them how to make money when there is not an event on. And I know that that's an area of expertise in particular for you. So I think, again, I can't say enough that this is boundless opportunity, but also the cachet and the excitement that comes with it, that for now far exceeds the actual spreadsheet opportunity.
Got it. Thanks, Glenn. That really helps to have that perspective. We do have a question here on media rights and the impact on franchise values. I think it says that we're seeing record sports franchise valuations. How much of that is attributable to the changes in media rights and streaming? Scott, I think I'll turn to you on this and see if you can give us some insight there as to how you see that interplay between media rights and franchise values.
Yeah, sure. Thanks, Shawn. I mean, media rights and the NFL is in a class of its own in terms of the value of those media rights. But in general, the value of sports media rights has gone up quite significantly over time. We don't see anything that would inhibit continued growth in that space. So I do think the increasing valuations of franchises is embedded within those rising media rights. And, I would take a step back. I think obviously any investment thesis for private equity is built upon, increasing media rights. But I also think, building on Glenn's point, we're really just scratching the surface on kind of the commercialization and monetization of teams and fans and franchises, in that the international component of especially US sports is growing, right? We have more and more games that are happening outside of the US, and those rights are going to become more and more valuable as well. And then a lot of these teams and franchises are also just scratching the surface on the brand extension opportunities that we've seen also across the pond or in like the English Premier League. So there is a lot to be let's say, excited about in terms of the potential valuations, some of which is much more bankable and you can write it into your investment thesis around, increasing media rights. And you probably take the NBA as a good comparable, and that $76 billion deal has set the bar for, what sort of multiplier, what sort of jump you might expect to see with the NFL. So I think, the media rights is a cornerstone of it, but it's not all of the franchise valuations.
Got it. Okay. Wonderful. It certainly is a change. I remember when football was just a Sunday thing, and now it's a Thursday thing, and sometimes a Saturday.
It's a 24-hour thing now.
Monday, which is incredible. The continued interest and drive of fans to engage with their favorite teams. As Glenn, as you said, even if your team isn't performing up to your expectations as a fan, people are interested in watching. And certainly that reliable value of the sports industry as a whole continues to defy a lot of what's going on in the rest of the marketplace. And so it makes a very attractive marketplace to look into. I'm conscious of time and that we've scheduled 30 minutes for this. And so while there's a number of other questions, we're sorry that we couldn't get to everything. We plan to follow up, and please feel free to reach out to us if you have questions. If there's areas you'd like to discuss with our team, let me know. I'd be happy to set up a conversation. As well, just if you have feedback on the session or there's other things you'd like to hear from us about, we would be open to that. So I want to thank our presenters for sharing their thoughts and their time with us. Thank all of you for joining our discussion. Hopefully you found it insightful and useful in your role in the sports industry. And so thank you for spending the time with us. We hope you have a great rest of your day.